Good morning, good afternoon, good evening, investors. I'm Taylor Watts from Watts Investing, and today I'm just updating essentially my spreadsheet and showing you the changes that I've made and looking at some earnings reports that came out yesterday and today, and showing Sharesies some of their new features and the new look that they've had as well. So nothing much has changed on the main portfolio. I added another section where essentially I've got every company individually that pays dividend here having their own graph, and these bars don't have any specific date attached to them. It's just each time a dividend has been paid. So some of these companies I would have owned a while ago, like Hallenstein's or something, and sometimes there'll be companies that I haven't owned very long, or something has had a dividend cut, like maybe Chorus, since there's only two there and I think I've owned them a while. But the ones that have four, for the NZ ones, I've probably owned them the longest. And it's just basically to show that through a pandemic and through sometimes ignoring some stocks, the dividends keep going up. And just essentially showing how each company's dividends are going and getting a better look at the portfolio, I guess, from a different angle. So this didn't take too long to make since I've got most of the data in my spreadsheet. I just had to compile it the right way and then just essentially duplicate the graph and change the boxes. So I'll just scroll down and get a wee look and talk about the interesting ones. So I guess Hallenstein's is the main one, as that is our biggest dividend payer. And then some of the ones that have quite insane changes, like Fisher and Paykel. I think we put a bit more money recently when it started dropping in the 10s and 20%. So that was super cool. Yeah, and then moving on, I guess there's not much to say about some of these, but we can see Contact Energy is one where a dividend is lower the next time, but it's only lower by 7 cents out of $2.42. So I think it was pretty much the exact same dividend amount, maybe just a slight percentage change in tax or something there. But we can see with these American companies, for each quarter, it just keeps going up as the dollar cost averaging into the stocks goes up. Same here, Microsoft, obviously just a weak currency exchange there. And then Triple M, our subscriber stock, keeps going up as well, and it goes up more and more depending on the growth of the YouTube channel, essentially, and if dividend raises happen. So we can see between these two dividends, I must have had maybe a popular video, and I invested more in between these two dividend payouts, maybe some referrals during a high referral time, and as we can see, it's more flatter the growth now. So it's super cool to be able to look at. S&P 500 is pretty flat since we don't invest that much money into the S&P 500. We're focusing on more tech and growth and dividend kings and stuff like that. But it's cool to see that it's still growing even though I'm barely touching it. And then we can see Coca-Cola is just super consistent. Realty Income Corp is one that obviously pays monthly, and we can see this one just keeps going and going and going, and this one will be compounding more often than the rest, with a slight increase on that as it's more frequent. And then we can see the ones that we haven't owned for as long, like Apple and Colgate. And then we can see ones, another one from New Zealand that's a big payer is Westpac, as I put a lot of money in there, as I thought the savings accounts for banks were pretty bad, but the stock dividend amount was not bad. So I just went through a simple logic and went, I'll take my money out of my Westpac bank account, put it into Westpac stock, as the dividend was something like 6 to 10 times the interest rate at the time. I think it's a bit different now, but it was still a big payoff, and it turns out the stock went up, which was unexpected, but super welcomed. And then we've got other ones that haven't paid as frequent, maybe a cut or I just bought it later on, quite a small one being MasterCard. AT&T showing a great line. I think we will be getting one or two remaining dividends from AT&T before they change up their company structure. I think we've got one next month looking to be a bit bigger than this, and then they'll be selling their film company HBO Max and stuff to Warner Media, or they're selling Warner Media to like Universe or something. I can't quite remember the details, but they're restructuring away from their media platform and focusing just on network. So that will be super interesting to see how that goes. And then we can see Vanguard Total Bond Fund, another monthly payer. We got slightly after Realty Income Corp. showing a bit more variance in the dividends paid as around bonds and stuff. And I think this super high one here is a double monther. I think it's a December, January type situation where they pay it at both at the end of December. I've seen a few monthly companies do that, and it's probably for tax avoidance reasons or something, I'm not too sure. And then we can see our last two here being Procter & Gamble and Visa. And yeah, I took about half an hour to make this, and I thought it was just super cool to see all of our dividends pretty much going up in a straight line. Not a straight line, but like a trend line, and just seeing them all grow and what different ones have different reactions to the market and stuff like that. So it'd be super cool to add on to these, as it's just simply just adding each dividend paid. I might make it more specific with dates and things, possibly into the future. Depends if I see if that information will help or not, but it's cool to see just on a per dividend basis what's happening. So that's the update to my portfolio. I'll give it a full rundown probably next week when I do the monthly challenge, and we'll update on our first Q3 month essentially, and show how that goes compared to my guess and your guys' guesses. So we'll get straight into looking at Sharesies as well. So also thank you to the person that used the referral code in the description. I can't remember the name. I think it's Carol, but don't quote me on that. I can't see it anymore. I think I got an email, but cheers for that, and I hope you get on with your journey and do well and keep me updated, surely. Sharesies has a new look, so it's a bit different. We have removed that cute wee circle we had. Personally, I like this one slightly better. I don't know about it yet. It's kind of weird how this is like up here and the picture's not aligned. Like, I think it would look nice if the picture was aligned. And like the total return, you could click on this and it would show your like gains, dividends, and fees, like a rundown on that. I messaged them, and I think they may be adding it, or even in here. And then the money you've put in, depending on how they calculate it, maybe have how much you've put in, how much referrals, how much you've lost to exchange fees and stuff. So I can actually compare it to my spreadsheet and maybe get the correct number, because I might have misdone this one, because this attempts to include fees, but I don't have enough information on it. And then we've got kind of a tab here where we can click on the risk, and we can filter it by country as well, which is cool. So we can see that as soon as the US companies started coming out, I started putting my money there, as I saw the growth opportunities, the dividend opportunities to be much safer, bigger, better. But we still have a few NZ stocks that we love. We can also filter by the types, so most of them being companies and some being ETFs. You can also sort it by the highest returns, and that will be here. So we can see Mainfreight, Hallensteins, and Westpac, even Somerset. So our NZ stocks are still pulling ahead, but I think that is because we have held them longer, definitely. And then we can see these big tech stocks coming in like Microsoft and Apple. So it's super cool to see that. It's cool to have these features, and I'm excited for them to refine them, make things better, and add more options for looking at different types of investments. And then you've still got these buttons here. So I'll give a proper rundown on all the stocks and all that in my normal monthly challenge videos, but I just wanted to update you on the new look of Sharesies and how they're improving it for the future, and essentially what I've done to my portfolio dividend tracker. And so we'll dive straight into it and look at a few companies' earnings that have come out. And essentially first up is Tesla, my favorite company. Can't stop talking about it. And essentially their Q2 has been pretty amazing. As you can see, the year-on-year growth of their automotive revenue is up 100%, hitting $10.2 billion of revenue, and their regulatory credits aren't a big part of that, as that's a decrease, which is, I guess, good for the Wall Street critics out there hating on Tesla. But we all know where this is heading, and gross profit has increased an insane amount. Biggest quarter yet, I believe, up 120% from last year. And their gross margins growing at an insane rate as well in the car industry and energy market, which is pretty insane. Then their total revenue, so that is including their energy, their services, and their operating things like that, is sitting at 11.958, which is up 100%. Like, these are huge numbers. The total gross profit, again, hitting huge, insane numbers, 128% on the last year, and their total gap gross margin of 24.1%. And then other important numbers are this operating margin, which is insane. And as we'll see, when they start producing those S and X models, those more expensive models, the fixed costs are already there, and they're going to really show their operating leverage and how they can just make insane profit margins into the next probably 2 years, especially with those new factories, new models coming out. It's just going to be exciting. And I think one of the funniest numbers here is this 1,000% growth on their net income. It's funny to see 1,000% compared to last year. Obviously, one argument is something starting off being small is easy to increase by a lot, but it's still insane to time something by 10, 11 magnitude. So that's just super good to see as a shareholder, and an exciting future ahead. And these numbers are really impressive because I'm pretty sure every single one of these numbers, apart from I think energy, storage building, and maybe like solar deployed, beat expectations by like 48% and above or something ridiculous. But we can see their earnings per share gap is 1.02 and their non-GAAP EPS of 1.45. The analyst expectations were like 0.9, so they've bet it by like 50-60% earnings per share, and this is an important number as it will be dropping their PE ratio, which has been one of the biggest critics and biggest points of why you shouldn't be buying Tesla at its price. But essentially its PE ratio has dropped from like the thousands to like 500, and now I think it's sitting around 350. This is just off the top of my head. And in the future, like if they can maintain in between these two numbers, because this quarter may have just been super good compared to the next few that are coming, but if they can keep it 1 and above, they'll be dropping that PE ratio within 100 and maybe below in the next 1 to 2 years, and that is just at their current position what the stock is valued at. And you'll be seeing stocks in the stock market now sitting at 80 PE ratios, like some of those expensive tech stocks, and that's where Tesla currently is. And if you're a shareholder like me, you're looking into the future 5, 10, 15 years, seeing them being a big player and seeing that value just coming in and exploding. So see their valuation really come true is super sick. I'm trying to buy as much Tesla stock as I can, as it is my top holding, and I have a goal to get, I think, to 8 shares by the end of the year. I think I'm sitting at just over 6, so we've still got a bit of a way to go, but we're going to keep putting money in there, and we hope that the rest of the market doesn't catch on before I can get a juicy amount in there. Otherwise, I'll just have to, I guess, bite the wood, put some salt on a wound and have a wee cry at that and have more money to put in it sooner if it does start exploding. But yeah, the rest of the numbers you can see here are just great. And their free cash flow is again just a great number. They've reduced their debt by an insane amount. They've spent 1.6 million on debt reduction, so that's super good. They spent 176 million on stock-based compensation, and that is running out. So essentially Elon Musk will be getting, I think there's like 500 million remaining in that for his plan, essentially, and then that'll balance sheet will start looking even better because it's not money just essentially being thrown away, I guess. So yeah, that's Tesla. It's looking great. I highly recommend looking at this full investor relations report if you've got the time and if you're interested in Tesla. It's a good read and very optimistic, and even the earnings call has some great points. So we'll move on to Apple. Apple, I've given this a slight skim read and it looks like the numbers are great. Haven't gone into too many details, but I'll do that in my own time. I'll skip the nitty gritty and just give the numbers up front for you guys. So their June quarter revenue is a record revenue for June. I believe it was higher last quarter up in the 94 billions, but that was during COVID as well. So this quarter is still looking great compared to the year on year. It's up 36%, which is a great number, and their earnings per share diluted of 1.3. And yeah, you can read the rest and you can skip down them. And I like looking at the numbers. So you can see that they've generated 21 billion of operating cash flow and returned 29 billion to shareholders, which is a great thing to have. Yeah, super good for Apple. And we'll move on to Microsoft as well. And yeah, again, just looking at these numbers, it's super nice for the brain, gives you a wee smile. If you're a shareholder, revenue was 46.2 billion for the quarter, increased of 21%. Operating income increased 42%, up to 19.1 billion. Net income, 50% increase, and earnings per share, 49%. And then there's even more business highlights and numbers that you can read through in your own time. But I just like those main big numbers. And there's even the fiscal year results for 2021, and just seeing the operating income up 32%, up 18%. Just these percentage increases are insane, because you think about like the average return on an investment being like 7.5% in the S&P 500 on an average, like over 25 years or something. And these companies are hitting multitudes of 7%. Like they're growing at 40 to 60% on most things, and that just shows the advantage of scales. It's just great. And then one of our biggest holdings as well, being Triple M, has great results to look at. And if you didn't know, this is our subscriber stock. Essentially, every subscriber I get on the channel, I put $1 into this, and every referral, I put the money from the referral, which is $5 into Triple M, and I add $5 myself per referral. So that we're essentially trying to get that as big as possible until I can no longer afford it. And then we might change the challenge to be something else. But for now, we love it. So yeah, their sales for the quarter are up 25% year on year, up to 9 billion. And then organic local currency sales increased by 20%. GAAP and adjusted earnings of 2.59 per share. Operating cash flow 1.9 billion. So up a little bit year on year. And then the return to shareholders via dividends are great. And the updated outlooks are looking a lot better as well. They've increased their looks there and there. And that's per share. And yeah, that's essentially the news we've got so far. In my next video, within like a week or two, when I do the full monthly update on the challenge, I will probably add in more companies as it is earnings time. I think we've got a few coming in on our earnings, however we look. I think Visa, MasterCard, Pepsi, Coca-Cola, McDonald's, Johnson & Johnson, and maybe even Amazon. Maybe a few others might be doing their earnings as well, so we'll probably get those in the next video. And yeah, it's just been an update. Happy investing, and I'll see you guys out there. Peace.